Welcome, world. Welcome to another episode of the Stocks is Talking podcast with Ib and Getz. I'm your co-host, Ib. Getz, what's going on?
What's going on? Episode 3. Bloody
How you
Monday.
feeling?
It's ugly out here.
It's ugly out here. What you mean?
It's
What's
ugly
going
out
on
here.
with you?
Markets is ugly right now. It's raining outside. I'm not feeling today.
Markets are very bloody today. Very red. Although last week we had some big gains. I heard the NASDAQ or the Dow hit records last week. I think it was anticipation of, I think earnings is coming up this week actually.
Yeah,
So
earnings season starting this week.
so I think the banks are doing earnings later this week.
Mhm.
I'm sure that the techs are going to be doing them eventually. So earnings, whenever earnings hits, they're going to affect the markets either up or down. So looking forward to it. Right now, it's not looking too good for the market. I'm assuming when some of these earnings start hitting, that means the more markets are going to be jumping.
Well, hopefully, we got to see what's going on with the earnings. See, how the recovery's looking.
Okay.
Right now it's ugly. We're gonna start off middle of the week. We'll get into the earnings and let
Who's
that
hitting
ride.
first? Do we know? What's the first major hitter?
JP Morgan, I think we got banks for the first day or two. It's going to be banks. So we'll be looking out for those. Definitely JP Morgan. That's a good tell. I like to see what JP Morgan's doing. They're usually the leader.
JP Morgan is definitely usually the leader. Crazy things with the earnings. I've been one to play options on earnings.
Mm-hmm.
If I'm thinking, hey, this stock is probably going to report great earnings, I want to jump in a week before with a call option. Because one thing I've noticed, a stock will jump up considerably if they report good earnings. So I always try to get in before that, but I'm not going to lie, that's backfired on me a few times.
Oh yeah, definitely.
The company. Go ahead.
Yeah, definitely more than a few times. But my thing now is instead of playing through earnings, I'll play up to earnings. So I'll get in early, especially like Apple, what they usually do. You get in a week too early, you ride it up. It'll run up all the way to earnings, right? Get rid of it before earnings, and then because they usually have a sell off the day after.
Right.
So that's how I try to play it. Now I don't, unless it's a long-term hold, I try to just stay out of it when it comes to the earnings,
And the reason why I like to jump in, because it's been so many times, I'll see, hey, this company reported smashing earnings. Now they're up $10-15 pre-market, and then they open up, they're up $20. And I'm always like, shit, why was I not in on this prior to the earnings? So I've seen that happen a few times. Then I'll jump in like, you know what? I'm going to jump in the week before, get a call option that expires that week, that following week of earnings. They'll report record smashing earnings and then tank on me.
Yeah.
and it frustrates me. Because it's almost like every time I see the success story of, hey, earnings hit, they shoot up. Then soon as my ass jumps in on one of these earnings plays, as we call them, it backfires. So I really don't know the rhyme or the reason when it comes to successfully playing the earnings that day, which is why your thought process of just playing up to earnings is probably better, because you really don't know. That's what I've learned. It comes down to you really don't know what's going to happen with these companies after they report earnings. They can smash the earnings, still drop. They can smash the earnings, still go up. It's a gamble.
But you got to think about it, right? People aren't rational. The market's not rational, So you got to look at, right? So it's not just about how they did the last quarter. They're going to give guidance on the next quarter, or maybe they won't. Like that was the big thing during the pandemic. Companies not giving guidance. So then they drop because they didn't give guidance. What's it matter if they don't give guidance? You've seen if they blew it out the water during the pandemic, what's to say they're not gonna the next quarter? But the market's not rational, right? So you just have this market tank. So that's why my thing is play it up to earnings, right? Don't FOMO. Don't have that fear of missing out, and play through earnings. Yeah. Wait, and then or if it's a long-term play, get in ahead of time. And if you're gonna hold through earnings, hold through earnings. You know, ignore the earnings. Whatever you're gonna do. You know, I mean, if it has a major run up and you're up 100, 200%, you know, 500%. If you want to sell it, sell it. But why sit through that pain unless you go long on a call? If you go buy a leap or something like that, and then it goes down, then all right, cool. Let's double down on it. Let's buy some more. It's on sale.
True.
You know?
True. And when you say a leap, we're pretty much talking about we want this option that expires a year from now. So It doesn't expire next week. It doesn't expire 2 weeks from now. It's probably going to expire February 2022. That's a leap option where you're just giving that thing room to breathe for a while.
Right.
So those leaps, I haven't. You know what? I did a leap on Snapchat. Do you recall that? Maybe a year or two ago.
Yeah, you killed that.
That Snap leap, I feel like I made about damn near $6,000 off of that because it just took off. Like, this was back when Snap was hovering around $9, $10, not really doing much. That thing ended up getting to like $20,
right?
Or something crazy. And I think my option, I was banking on that thing going up to like 12 or $13, and I had until the following year.
Mm-hmm.
Next thing I know, that thing's at 12 to $13 2 months later, or less than that. So
yeah,
that was sweet profit.
Those
leaps come handy.
Yeah, I mean, that's what I'm doing right now. I'm messing with leaps on a few things, but it's just like today's bloody, right? I had a options play I'm in on Lyft, and when I looked at it this morning, I was up 60%, something like that, and I held on to it, you know, because I wasn't ready to get rid of it yet. They ain't really moved. And then I looked at it later on today. I'm down 20%. I'm down 20%. So I said, all right, I'm gonna double down on it before I can get the order and it jumps back up. I'm like, man, killing me.
Because you were trying to buy on that dip.
Right.
Trying to buy back in on the dip. Yeah.
Yeah.
So talk to me about, and I like how you keep saying you were up 50%, you were down 20%. I know for me, and this is something that you kind of hit me with a while ago, and I started strategizing using this technique. I always look at, I'm probably like most people, I'm looking at how much money am I making from it. If I put in $30, now I see I'm up $40, like, all right, cool. But I've noticed with your strategy, you like to look at the percentage of money you're up.
Right.
That's never been my flavor, but what do you think is the best way to go about taking your profit or minimizing those losses? Like, is it better to just look at a dollar amount? Is it better to look at, all right, this is the percent that I'm down, is it the percent that I'm up? What's the difference, to be honest?
I prefer the percentages because I mean you should have your risk reward ahead of time set up, figured out. You know, so if it's all right, if your goal is to make 10%, then when do you get out if you're losing? Is it 2%? Is it 3%? Is it 5%? You should know that before you get into the trade, you know? So my thing is like, I was up 60%, but I had no intention on selling that right now because I have a whole thesis behind that trade, right?
Okay.
So I expect that trade to give me 100%, 200%. So it being down 20%, that's fine. I'll sit on that. And like I said, I saw it down 20%. I was like, hey, it's on sale. It's you know, it's a Cyber Monday sale. I'm a buy some more, you know, and I couldn't get in, you know, so I'm like, the order's still in. I'm not even going to look at it until after 4:00. I'll see if I got it. If I got in, cool. You know, if it dipped again, but it ran up before that order could even execute, you know?
Okay.
That's my theory on it. Everybody has their own way of doing things.
Yeah.
People they looking at the dollars, but my thing is whether you put in $5 or you put in $100 or 100,000, it's gonna be when you look at it. If you put in $5 and you're up $5, all right, well I'm up $5. No, you're up 100%.
Right. And that's such a huge difference when you look at it from that perspective. It's like, damn, because if you look at the money you're putting into your bank, what's the percentage over a year? What percentage are you gaining off of that money?
Right.
Up 1%, less than that, most likely. So if you're coming in and gaining 100%, though it's $5, that percentage is what you should really be looking at. It's something I need to take into more consideration.
Yeah.
I ain't gonna lie, I'm always looking at the dollar.
Yeah.
How much money am I making off of it?
Right.
Not what percentage of that money am I gaining or losing.
Right.
Because it's just as important for that risk management we talked about in maybe the last episode Risk management is key.
Right.
So to your point, if you're trying to go in thinking I want to gain 20%, you got to have that strategy in place of what's the percentage I'm willing to lose.
Right.
Because then at that point, you're operating as a smart money investor, smart money trader that we continue to talk about. But that's the whole point. We want to be into that smart money.
Right.
Whether we're making or losing, we got to be minimizing those losses. And minimizing is all about that percentage that you're losing.
Right.
So, I mean, that's a good strategy.
Yeah. I mean, and I mean, I looked at it today, right? I was down a few $100s overall on one of my portfolios, right? And so if you're looking at the dollar figure, you could look at that and be like, oh man, I'm down a few $100s. I'm selling everything. But when I looked at what I did, I went and I looked at my year to date. I looked at my year to date and it says I'm down 0.3%. So what's $300 overall? What do I care? You know, I'm not worrying about that. You know, I'm just gonna now. All right, I'm down. Now I can go buy some more. That's what I was looking today. I was shopping, trying to find something.
You see anything? I'm looking at NKLA, that electric vehicle.
I can't
what's
touch
going
it.
on?
I can't touch.
Man.
What's up with you and that? I can't touch that company. I'm so good. You know, if we're gonna get into the these future tech plays, or not even tech, but you're talking hydrogen or EVs and stuff like that.
Yeah.
Now there's an argument to be made for the hydrogen as far as the trucks and stuff go, but if a company can't prove that they're not vaporware, if everything that they do says that they're not real, I'm not messing with them. I mean, not for a trade, maybe there's something there, but for me, I can't see doing nothing except for shorting it or buying puts. I'm so good on that company. I'm not touching that. I'm waiting for them to just go out of business.
I jumped in on them because I'm looking at them as a top competitor for Tesla.
Nah.
So I'm like, look, I see it, but this is my thought process. Like, I see Tesla. They're trading out. I think they got over 700 today.
Did they?
So they're doing their thing. I believe so.
Okay.
I'm going to check for you as we on this joint right now. They are at 703 right now. So I'm like, okay, what are those primary competitors? I've seen NIO, which I also invest in. I saw NKLA, and I know they had a few issues legally, but I'm like, look, things happen. But if Tesla considers you a competitor, and I'm not even sure Tesla considers them as much as the market in general considered them to be a competitor, I'm like, all right, well, let me dump some money in, even if it takes 2 years. If this thing just gets half of what Tesla is, I'm in the money. So that was kind of my thought process. When I told you I jumped in on NKLA, what did you say? Why?
Yeah.
Why did you get into that? That was your first thing,
right? Because I want to know,
and I called you excited about it.
Yeah, because I need you to explain it to me because I don't see it. That's my thing. I'm not saying don't do it, but explain to me what you see because I don't see it. I could name a bunch of other companies that I'd put my money into before I ever, throw my money. For me, it'd be throw my money in the trash and light it on fire. But before I do that,
that's drastic. Come on, guys. We ain't gotta be drastic. Let's just talk normal. Come on now.
I'm just saying that's how I feel. That's how I feel about the company. So I'm not touching them.
No doubt. What now? You asked me, what is it that I'm seeing in LA? I just see that they're a competitor for Tesla. I'm not gonna lie to you. That's the main thing I see. What is it that you're seeing that has you looking at them like a company that you're pretty much throwing your money down the drain? Because I don't understand that. Like I thought they was a competitor. Well, it's like kind of like Snapchat and Facebook. Snap's a competitor. And again, we had this argument back then,
right? And
you were down. And here's why I also feel comfortable in my NKLA strategy. Because you told me the same thing about Snap. I don't see it. How are they going to monetize? How are they going to make money? And I held on and I'm mad now because I do not own Snap. And them fools had like 60 something. I had them back at $10. But you were part of the reason why I traded them or sold off because you didn't see it. So for you to tell me you don't see it in NKLA, I feel very good about it. To be honest, I feel great. I might go buy some more right now.
All right,
let me get off this thing.
All right, that's a good strategy. No, I'm like I said, after all the controversy with them, my thing is, like I said, always said before, is show and prove, right? So
Yeah.
they had all the controversy, but they haven't shown me anything else. They haven't shown me that they can act, that they have actually any technology of their own. The deal didn't work out with GM. Everything that they had going for them went away. So my thing is now, before I can invest in you, I need you to show me that you are something besides vaporware. Until you can do that, I'm not going to touch you. Because there's other things that it's not like they're selling anything. They're not doing anything yet. So instead of putting my money into them, I could put my money into Neo. I could put my money into Xpeng. I could put my money into Li Auto. I could put my money into Tesla, right? I could, all right, we want to go to hydrogen. All right, cool. I'll put my money in Plug Power. You know, I'll put my money into there's so many other companies. Matter of fact, we could go with the conventional ICE motors as far as the trucks, because that was their main thing, going after trucks, right? All right, so now I can go put money into Cummins, who makes engines, you know, but I believe they have something they're working on as far as I think it's EV. They might be doing with something with hydrogen too, as far as the Class 8 trucks and stuff like that. There's a bunch of other companies in the space. I think there's another one, NGA, which is going to be, I think, Lion Automotive. They're doing school buses. There's so many other companies that have so much more that they're actually showing. They're showing the technology. You know, Proterra, ACTC, that's a SPAC that's going to be Proterra. They're
a SPAC. Whoa, bring it back. Come rewind. What is a SPAC?
Yeah, special.
They throwing out these terms.
I'm sorry, it's a special acquisition company. So it's a blank check company, right? That's gonna put money into another company to bring them public, right? So that was the big thing last year and all that. Whatever, everybody was throwing money into these SPACs. But if you look at, since we talk about that space, you talk about Class 8 trucks, the big 18-wheelers and stuff like that. Proterra's a company that makes buses. They're doing trucks. They do the batteries. They got a deal with I think it's Komatsu or something like that to do electric construction equipment. So all right, they're doing all that, but I'm gonna go over here and put my money into Nikola? No, I'm good.
But when you break it down like that, it makes sense. So I can't even be mad at you. I might want to look into some of those companies, because you mentioned, what was it, Proterra? Proterra, yeah, you mentioned that one to me before too.
Yeah.
So I might check them out, because one thing about me, I want to get heavily invested into these sectors for the future, which with regards to electric vehicles, hydrogen, fuel cells, all that. I want my portfolio, I want a separate entity in my portfolio strictly for those future innovators.
Right.
Because that's kind of where it's almost like the gold rush. Like, you want to get in early, so when it explodes, you can cake up.
Right.
That's the overall, that's what I want to see happen. Of course, we don't know what's going to happen at the end of the day.
Right.
But I'm trying to always expand and get into some of these newer strategies. I had something I wanted to bring up. Best Buy and Amazon, because we're talking about competitors. We put something out there on our Instagram and our Facebook. If you're not following us, you're slacking. Instagram is IB_gets_podcast. So we put something out about Best Buy. They're now transitioning into a membership kind of a platform where they're gonna allow you to buy in $200 for an annual membership, similar to Amazon Prime.
Right.
And this membership is going to include concierge tech support, device installation, other perks. That caught my attention and our attention, which is why we put it out there, because I'm wondering, okay, is this going to push Best Buy forward in terms of that stock price? Because Amazon's at, I don't even know what Amazon is at right now, over $1,000. Amazon's something crazy.
Yeah, aren't they? I think they were like a few thousand or something. They were up there.
Probably.
Yeah.
There's something crazy. Best Buy's, I don't even think that's over $100 right now. Yeah, it could be.
Amazon's $33.80, about that right now.
Okay, so yes, they're way up there. So I'm wondering, this new practice that Best Buy is operating in, kind of trying to mirror Amazon. Do we think that's something now we need to look into buying Best Buy? or is this just a futile attempt at becoming a competitor of a giant that they have no reasonable expectation to compete with?